The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour. Something big just happened outside, like a car accident or something. What do we have going on here today? Well, it's another day into the breach, dear friends. We start the day up 15 points on the S&P cash volume. Is nowhere close to what we need to be breaking out highs. 2.13 billion shares on the consolidated tape. We will talk more about consolidated here in a minute. And of course, what do you want to see? You wanted to see some volume come into this market. If you were favoring a bull market and a breakout, not just yet another test on light volume. So far, I would have to say 2.1 billion shares is not as weak as we've had in the past, but we are at all-time highs. What do you need? Volume. When do we need it? Now. We can start our own riots. And what do we need? We need volume. And what do we need? When do we need it? We need it now. Now I'm going to have to come up with a BLM reference. And maybe during the break I'll think about it. But as always, we come to we'll come back to each other at this time.
The following takes place between 2 p.m. and 3 p.m.
Anyway, what else is going on out here? Well, like we said, volume, when I take a look at it, and kind of tough to figure out exactly what volume is. It is kind of lumpy. And a lot of people don't understand what lumpy really means. All you have to be is a trader for a while to figure that out. And you'll see that most of your 80% of your money will come on 20% of your trades. And because of that, your income will be lumpy. You've got to learn to live with it. But the volume is pretty much that same thing. It's one day can look good, another day can look bad. I wrote a little app that just checks the volume every 30 minutes and saves it. I'm working on something to show some of my subscribers on how to build models for trading. And I think there'd be a good introductory level thing. So I'm saving all that data now, but normally I just kind of know what volume is because I look at it at the end of every day and have for 15, 16 years. So I have a good kind of indication. I guess it's the same thing if you were learning to surf. You can kind of tell what a wave is, but it's going to take some experience to see what that actually means. If we don't get some decent volume, which has been light, by the way, since about 11:30, I was never anticipating more than about 3.5 billion shares on the consolidated tape. Let's get this party started.
That it's all just a little bit of history repeating.
It is history repeating. And what are we doing? Well, we are talking about 1851. The nascent telegraph industry gets a big boost as the Erie Railroad becomes the first train company to use a telegraph for dispatching trains, vastly improving the safety and efficiency of rail travel. Everybody would say, hey, the train just left. You should see it in 4 hours. If it didn't get there in 4 hours, they didn't start sending a train down the other way, knowing that there was a train on the tracks. Before then, it was very common to have trains running into each other. No one even had a central way of saying what time it was. The telegraph also allowed for people to sync up their clocks, so at least everybody was talking about the same time. And of course, not only did the telegraph make way by putting and getting the right-of-way along all those railroad tracks for another business that came another 50 years later with the telephone companies. And then 100 years later, guess what? The internet and a whole bunch of fiber optic and almost all of it is laid right next to the side of every one of those train tracks you see today. So if you ever wonder why someone doesn't, there's some train tracks there and no one uses them anymore and nothing's happening to them, there's a reason why, and that is that wires, and more wires are laid all by the side of those train tracks. And yeah, people may come in there and steal the iron, but the cable is still in the ground, and that's all that matters today. Those digital waves moving out there. The consolidated tape, I wanted to bring it up because I had a few people that have asked a question. I'd say I'd at least handle it. When everybody talks about volume in the market, you want to make sure you're basically comparing apples and oranges. Tom O'Brien, I know, speaks a lot about what is the floor traded volume for the New York Stock Exchange. A lot of times he'll say 800 million, maybe 1.5, 1.2, 1.3 million shares on, 1.3 billion shares on a day. Of the stocks that are listed on the New York Stock Exchange, about 25% of the shares are actually exchanged through the NYSE. 75% are on ECNs, or electronic commerce networks, like, what would we say, like BATS, which is a big one. And so that would be it. Riot rhetoric. All stocks matter. Oh, got a good one here. All stocks matter. We'll have to get that. Check in with my email. Anyway, we'll get into that in a second. Consolidated tape was introduced in 1975. It's overseen by the Consolidated Tape Association, which is a thing. Consolidated tape data comes from the two major networks where they're administrated by the NYSE Network A, NYSE Amex Network B. So when you really look at the volume or all the shares traded that aren't traded on over-the-counter networks, you want to look at all of them. I just think that it's a better idea. I can't prove it. 25% is a fairly big sample size. If you asked 25% of the people on election day who they were voting for, and they actually voted, you'd probably come within 0.1% of what actually everybody did vote for. So that is one thing. It's a big sample size on just the regular NYSE floor traded volume. It's a big sample. Just because it's available, readily available, even on things like all the Yahoo finance boards and everything else. The consolidated tape, just a little easier to find out, and you don't have to worry whether or not there's some anomaly between the floor traded and the major traded. If it was traded, that's all I care about. If it traded, that's great. If they decided to pay 5 times the commission and traded on the New York Stock Exchange, I don't know if I can imply that means anything different than someone trading the same shares on BATS, other than they're saving some money. But anyway, that's it. The consolidated tape, and by the way, they've got consolidated tapes for everything, including options. Just remember, all stocks matter. All stocks matter. We'll be talking about another ECN when we come back, and that's BATS. I've got a question in my email stack, and we will handle that.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Cheyenne Wyoming, if he is still there.
Yeah, hi, Dave. I just wanted your opinion. We have a classic Dow sell theory with the Dow Jones transports approaching declining resistance line on the weekly and miles from their previous top. And politically, I'm following that thing closely. It looks like Trump's going to prevail. But, the politics of keeping the current regime in power is influencing the Fed, I believe. Just give me your opinion on the whole mess.
The only time the Fed acted probably correctly was because of Volcker, and that was back in 1991. And that's probably the last time they've done it. It didn't matter which political party. Since then, Paul Volcker's probably the only one that acted correctly, and it probably caused the election, contributed to the election of the first Clinton. Right now, I don't think that they're acting any different than they've acted before, and that is they've got a heap of politicians. A bunch of them are congressmen and senators, and a lot more of those congressmen and senators are sitting on the right-hand side than the left-hand side of the aisle. So it's not just a presidential thing, but I said it, whatever it was, a year and a half ago when Ben Bernanke got fired on 60 Minutes. I mean, there was no discussion of it. There wasn't a hint that he wasn't coming back as chairman of the FOMC. And all of a sudden, Sunday night, halfway through an interview with the president, no, he isn't coming back. And you kind of have to look at that as, I don't know if he didn't like him because that guy wasn't his guy, right? He didn't put him in. He didn't appoint him. There's a lot of that in politics, but it goes on both sides. Like I said, the last time that I knew of in history that a FOMC president really pushed for something that would hurt the incumbent was that 1991-92 election cycle. So it's not uncommon. Now, a lot of people are saying the polls are moving the markets. Well, the polls haven't moved at all. What has moved is, I heard a guy actually call them prostitutes, PRSS, and put the end of prostitute on the end of it, by trying to make news. And the polls haven't really changed that much. What has changed is the model for those polls. So I don't think anything's really changed to me. Something that looks a lot more likely as the determining factor right now in the markets is the dollar. And I suspect that has a lot more to do with the Treasury Secretary than anything else. You don't understand about how they're manipulating the polls, though, right?
Well, yeah, that's right. But even the more, Dave, what I'm following is there are accurate pollsters out there, just like everything else, and they've got Trump ahead right now on the national level. And I follow Steve's work really closely, and his analog for a typical presidential transfer from Democrat to second term deal to Republican is not up to now working, or it's showing that the Dems stay in place. So something to me, yeah, I'm just sensing something.
I don't have many bones to pick with many people, but when it comes to something that is not provable, I do. So I will say that there is little or no correlation that you can prove with presidential cycles.
Possible.
That is the equivalent of going out and asking 15 people who's going to be president and saying it's a poll.
I respect all your views. Yeah,
that's what I was going to say, though. There's no way to prove it. There aren't enough samples yet to make that. So I'm just going to say, yeah, that's great, but I got a lot of noise and very little signal in a lot of stuff that I'm looking at, and I want to try to stick. I want to stick to the signals that I am getting. To me, the volume was a much bigger signal coming out. We had 5 billion shares on Friday, and we didn't even get close. We should have seen probably 1.5 billion or maybe 2 billion shares coming in after the FOMC meeting. We didn't have anything like that. To me, that is a much bigger signal. And from one day of some pollster saying that he's expecting that 35% of the registered Democrats will make it to the poll, and the next day he says 30% will, and 40% of the Republicans will make the polls. Right now are not shifting that much. So I'm not saying who's getting elected. I'm just saying that if the market's moving on it, it's moving on somebody changing a model somewhere. The actual movement without some kind of major issue coming out that there hadn't been in probably a month or two, they're just not going to move that much in a day or several days. So again, for me, it's the press trying to use the polls to try to gin up either support or resistance for a particular candidate based on changing how many people they believe are going to show up to the polls, not how people that are saying that they're going to the polls tell them how they're going to vote. So I'm really reticent on anything more than maybe a weekly basis to think that the polls are actually changing what the market's doing. I think it has a lot more to do with earnings right now, and the highest correlation that I have right now with the market is the dollar.
Okay.
So why politics does come into this somewhat, I think it is a very broad brush to paint the market with. I'm not really going to I really don't subscribe to the model that as soon as the poll moves one way, the market goes up, and a poll goes the other way, the market goes down. If you've ever looked at the statistics on that, in fact, even the last presidential election, why the press reported swings of somewhere around 7-8%, the core never changed more than 1%, and it was all just the press fanning flames to try to make it like a horse race. So, whatever you see, in the news, kind of average it over the last 7 days, look and see how many people they ask and what their model, and if their model changed. Because I'm going to tell you that the results, if they're doing a fair survey, are going to come back probably within 1% over each week. They're not going to vary 5% or 7% like we've seen unless someone's changing the underlying model. There's a great book out there that I will recommend called The Signal and the Noise. It is a guy that accurately called the election last year, Nate Silver, in 2012 and 2008, Nate Silver. And unfortunately, in this entire election cycle, he's been wrong. So maybe that also tells you something.
But,
you want to hang on?
Thanks for being there. No, Dave, I appreciate you being there, man. Thank you for your response.
Okay. You bet.
Bye.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And I was talking about a couple of books. One is The Signal and the Noise. A lot of people, it's a good book. And a great introduction. There's another one out here. I've talked about it before. I've got it here. I think I've got the Kindle version of the other one. Maybe I can hold it up here. I don't know how good this is going to look. Called Super Forecasting by Philip Tetlock and Dan Gardner. Tetlock was an academic, but he went out and started getting everybody to make predictions in all kinds of fields and got together with them and then figured out what made good predictions and what made bad predictions. I'll give you the cliff notes on it. Most of the people that are very good at making predictions, especially a lot of the people that he got in there with that were like sports bettors on some of these big sites. What's the name of them now? They got, I guess they got reinstituted in New York. FanDuel, I think it's one of them. I don't know what the other one is. But it is. It says, Dave, is it just me or this is a dollar drop after Fed and BOJ interventions? And the answer is yes. And like I said, I've got a friend up in Chicago that is big into Forex. And he says that that he's pretty sure the Treasury's just out there with a fire hose in the Forex market trying to keep the fire at bay and keep the dollar down because everybody wants to get into it. And, of course, every time the dollar starts moving up, the markets really start screaming because, of course, I think they know that interest rates are going to go up next year. Any look at that dollar moving higher means that this next quarter might mean lower profits and lower EPSs. And, if we're in what I think right now is a big, huge cycle of distribution, but distribution without the ability to really find a lot of people. Market bubbles have ended for the most part when there's no new money coming in. And try as they might flog themselves out there on the press, the big men of the street have not been able to make everybody flood back in and see the kind of trading and retail trading that we saw back in 2000 in the peak before the bubble or even the peak in 2008. We talk every once in a while about just the amount of viewers on CNBC. In fact, why there is Fox Business News, I don't think it has much of a calling yet. And Bloomberg has very few people watching it as a cable station. But the CNBC is at and still at viewership levels below when it started in 1992, which may also tell you a little bit about how many retail investors are in this market. We are the chosen few. And we've been up here to this top of the mountain, and they tried to put I'm going to mix about 4 metaphors here. They put that flag up in Peoria, raised it up, see who salutes, and guess what? The volume always just dies right here. Anywhere from 2165, I think, the first time, 2175, it just all takes out. And I think I said in my newsletter, they can they can drag the retail traders to the stream, but they can't make them drink. Everybody wants to buy a pullback. No one wants to buy the breakout. And if I had any market theory right now, it would be that everybody is more than willing to buy a breakout, but not, a pullback, but not a breakout. And that has set up the modus operandi of this market. The only thing that happens is everybody's hoping this market breaks out so that they can sell. You need a market that you can sell a great deal into. And, we've had fund outflows now for a few months, so that hasn't worked. And the only thing you get is some 401k money coming in, but it's pretty light. So we continue to have this market where everybody wants to drive the market higher. The problem is there just isn't enough new money to come in to do so. Now, maybe we hang out here for the next 6 months and finally chew through this high, but right now the volume does not tell me that is what we're doing. And I have an email. Am I bearish? Yes. And anything else? Yes, I do have a bearish position. So we will say that. What else is going on? Yeah, somebody in the den saying Fox Business News tends to be more politics. And I think that's just because CNBC right now is got a lot of guests. And it's told those guests that if they go on Fox Business News, they won't be allowed back on CNBC. In fact, one of the guys bought the rights to the PBS series about financial trading, and I guess they do that on Fox Business News. I think his name is Scaramucci, but that is it. Please refresh charts. I don't have any charts up. I don't know what that's going on. We're still looking at the consolidated tape. We'll look at it now. So we'll take that. So yeah, there's I think that Fox Business is kind of one of those things, kind of like when Jay Leno and Letterman were going at it. And they said, if you go on Letterman, you're not coming on Leno's show. It's the same kind of thing. And it happens a great deal in that business. So not a whole lot new coming on. Anyway, going to get to some charts here. Well overdue. See how some of these are doing. But again, let's take a look at the volume out here. 2.33 billion shares. This volume is going to come in way, way, way light today. So I'm not really, we're going to have some kind of extraordinary news to bust this market out. Some stocks that look like they could be on a big ABC down is ZAGG, Z-A-G-G. Wouldn't be shorting an $8 stock, but man, this does look very much to me like you had a ton of juice come off the lows, but just get back up to the supply line. And then, of course, the last week or two had extremely light volume. If we look at the expansion on this, hopefully we'll get back into it. Did we get back into 1090? Yeah, 1075. I'm kind of looking at that ABC right there. And that is it. Yep, 54% retrace on ZAGG. And, you had a couple of days, but to me it was a lot of short covering on this. Another gap up, which didn't have near as much volume. And this thing has just been going sideways for a while. I would watch out for this one starting to fail, finish these gaps. But the 1-to-1 would take you to $2 on this company, ZAGG. So keep a look at it. If I'm not mistaken, this is the company that makes all kinds of accessories for smartphones and on iPods and stuff like that. Let me make sure here and look this up. Yeah, for mobile devices, offers glass and film screen protection, keyboard labels, computers, that kind of earbuds, cables. Just everybody and their dog now is in that business, so I don't see a whole lot coming on. Give me a call at 877-927-6648. Email me at path@tfnn.com. Post messages in the den. I've got charts up.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Had another good question from Warren in Denver. He says he's a listener and a watcher. But he's asking about BATS, which is got a history. If you're not familiar with this company, we talked a little bit about the business of ECNs earlier in the hour. ECNs, of course, are like stock exchanges, except they don't have all the overhead, and they pass the savings on to you. Well, maybe you're a broker-dealer. But in BATS, the question is maybe is election volatility going to make this stock go higher? And the question is, it's the second largest exchange. It passed NASDAQ, new NYSE, and ARCA, and now has a German voice. Is this thing going to really take off? And the bigger thing for any of these companies, of course, is inherent volatility in the markets, which the Fed and the Treasury is trying to, from every indication, is tending to tap down. I think we're getting more volatility, but I don't think it has, again, a lot to do so much with the elections. You've got a market that is being kind of adjusted on a daily basis. And as I've said many days before, it's been the dollar, which has been the control rods and trying to keep this nuclear reactor of a market from melting down. They've been very active in it. They send out and trot out all the Fed presidents to say different things to keep everybody guessing. In fact, some of the documents yesterday that were released show that these guys are actually trying to keep the markets guessing, to not let everybody decide that the Fed's got its back no matter what, and keep it going up. So to me, BATS, is it going higher? Is it going lower? These indexes, these ECNs and the exchanges all move on one thing, and that is volatility. If you don't have volatility, you're not going to have volume. And to them, I have a feeling that the volatility will come back when we don't get the daily adjustments from the Treasury. And for the most part, I suspect the talking heads from the FOMC will go away after the election too. So yeah, I think we'll start getting our moves up, and the market will probably react to higher interest rates by coming back down. That will add to the volatility and probably do very well. But I don't know. To me, could I see this busting out and getting back up to $28 or $29? Yeah, I could. But it's not the most heavily traded stock out here, and it's a recent IPO. Remember, this company blew up because the first day the NASDAQ wasn't right. I think it was another stock at the same time. Was it Facebook? Was Facebook a week or two after this one blew up, or before it? But they didn't put out a whole lot of shares of stock. My guess is when this goes back up, they'll continue to distribute stock for a while. So that's it on that. Let's get back to some of the stocks that I've been trying to keep an eye on. And looks kind of a little over a frothy move on the FOMC business yesterday. We are up 12 points on the S&P cash. Volume is 2.4 billion shares. I still think that we should be pressing 3 billion right now if we wanted to go blow out some highs. Doesn't mean we can't go up there and kind of fool around, but my guess is the higher we go, the more this rubber band that gets stretched is going to just pull back without any kind of decent volume. And again, this is light volume in the indexes. There's much lighter volume in the individual stocks themselves. So that is problematic. New Skin is one of those companies from China that I've been very wary about. It has come back a great deal. I'm going to say the casino in China for the stock market starting to heat back up a little bit again. NUS is the symbol on this one. It has come back up to this gap that we've been waiting for a while. Gap down on 3.7 million shares on the 18th of July 2014. So we've taken a little over 2 years to get back to this level. Volume today, as we hit the bottom of that gap, 1.1 million shares. And we've been talking about how many of these gaps are getting re-hit, how many of them are getting hit on very light volume. NVIDIA, another one out here that's done nothing but go higher. You always have to wonder about these parabolic moves and when they do correct. We talked about just how far this thing could pull back on just a standard correction and still be in a bull market. We're back up here to the highs. You wanted to be seeing some kind of breakout move with volume the last 2 days to say that this could continue. It looks exceedingly weak to me. Yesterday, 8.4 million shares. Today, just 5.5 million shares. You wanted to see a sign of strength, and the question is whether or not they're just going to try to hold this market up into Friday. I just don't see that many shorts and short operators in this market. They've been burnt so many times that they are extremely reticent to be short this market for anything more than half a day. And why the market continues to see, and probably will continue to see, big air pockets on the way down like we experienced in the, 2 weeks ago? 1 week ago? How quickly markets move. Do we have any more emails out here? Okay. Got that. Anything in there? Okay. What else do we have out? Look at a few more. AEG. That's a bouncy little stock. Nothing in that one. KND. Kindred Healthcare. Was thinking maybe some of these healthcare stocks may come off. I think we talked a little bit about this one yesterday. I wanted to see some kind of sign of strength in these and maybe catch a pullback if I get a sign of strength. Haven't seen anything yet, but some of these have pulled back to their sign of strength. We're going to probably check in on this one the next few days just to see if there's anything here. Good, nice move up off the February 16th low to the May 5th high. A nice volume pullback, which is exactly what you want in a standard Wyckoff pattern. I like it. I like it. I like it. What I don't like is the market up here on light volume. If we were seeing some kind of decent volume in the 4.5 to 5 billion range, I'd be all over this right now. But up on 525,000 shares today, when we hit a low of September 16th with 1.2 million shares, which is light volume, I'm going to give you that. It's just we need to see. We used to have the IBD lady on. I forget what her name was. She'd be on with Tom in the 4 o'clock hour on Mondays. But she always talked about having, 4 or 5 days of follow-up on a stock. And I didn't use the same rule, but I had a similar kind of rule. And that's just not what I'm seeing now. We are getting some bounces, but the entire market is very, very light. And that's why I'm not biting on this apple to the long side. In fact, I'm going to give you all just a little hug when we come back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And welcome back. Kate Stalter was her name. Somebody, or our engineer reminded me. From IBD. But yeah, with a lot of discussion about getting some continuation days after you moved on. AutoZone had some good earnings out this morning. Popped a little higher, gave it all back already. And maybe a good indication of just how much juice is left in the tank for most of these stocks. For me, just not a whole lot. 2177 on the S&P cash, up 14 points, just 2.45 billion shares so far. So again, with just a couple of minutes left in this show, look like we're probably going to get to about 3.3 billion shares on the day, maybe if we're lucky. So is it horribly bad? The answer is no. Is it bad in the context of trying to blow out some existing highs? I think the answer is yes. think the last 30 minutes of today are going to tell us a great deal more when the pros get in to the end of the day and find out whether these guys are selling or buying. They certainly haven't been stampeding to the door. I kind of have a little bit of a idea that we need, or that we are a little bearish out here.
Smokey just gave me a bear hug.
Yes, he did. He gave me a bear hug, and I'm giving the market a bear hug out here. Wanted to see some volume, and they just didn't have much. Let's take a look. Do we have, I got a time for just a couple more out here. A and F on my list of things to talk about. Some of these stocks, you'd think we're going to find some lows out here. They should have bounced out of those last couple of days if there was some really good stuff coming in. And the Crombie and Fitch didn't do a whole lot. You know, you are into this low with lighter volume. It's kind of gone a little sideways out here. BBBY also had earnings. A little volatile in after hours last night and a little bit out here today. But ran the shorts, kind of given it all up from the rest of the day. So again, I'm not seeing anything else out here that other than everybody thinks that they got to buy this market that makes the market think it's going higher. I don't see very many bears, which means that I'm always reticent to go long. The more of the bears, the lower the downside because they're going to be there to buy. If we've got no bears, then who's going to buy my long if I'm wrong? I'm going to have to start making some more rhymes out here. Anyway, 2177, we're kind of where we opened up here this morning. The volume's been kind of sideways. Does that mean we're kind of going to be, you know, is this thing going to fall or run over? No, but I think we're kind of in this trading range and we're kind of stuck again. As soon as the market starts moving good, we start seeing the dollar move back up. That puts the throttle, takes the throttle off the market because, of course, we don't want a bubble to begin. And, of course, they don't want the market to pull back either. So they give a little bit of cash back to the market before the end of the day. So, yeah, is it going to be tough trading? It is going to be a lot of sitting on our hands. I've got 10% of my portfolio in a position, 90% in cash, and will be opportunistic as things go forward. But unless I see some kind of strength out here to follow up yesterday, which I do not see, I want to see volume, I want to see movement, and I see neither. So at the moment, I'm willing to invest a little bit of risk, but not a whole lot. And I would rather be on the downside with the lack of shorts in this market. Anyway, we're going to see you tomorrow, going into a Friday. Same bat channel, same bat time. Remember to sell when you can, not when you have to. It'll just make you cry.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.